Hi, it's Sir Rob. Today I'm going to discuss the basics of accounting information systems, or AIS, and show you how to use MS Excel to create and maintain a simple spreadsheet-based AIS. Designing and creating an Excel-based AIS requires a combination of technical Excel proficiency, accounting knowledge, systems thinking, and business process management. You will need the knowledge you gained in the previous chapters to be able to fully understand the concepts discussed here, and eventually design and create your own Excel-based AIS. Systems thinking helps professionals see beyond individual tasks, anticipate consequences, and design processes that are efficient, reliable, and adaptable. Business process management is a structured approach that organizations use to analyze, design, execute, monitor, and continuously improve their business processes. A business process is simply a set of related tasks or activities that together produce a product, service, or outcome. For example, processing a customer order, approving a loan, or running payroll. As always, in the practice of accountancy, we should remember to be professional, work effectively and efficiently, follow standards, and document our work clearly and adequately. The topics of this presentation starts with the rationale why we can refer to accounting as an information system. Then, we will discuss the basics of the concepts of AIS, starting with the three components that make up an AIS. Then, compare it with Management Information System, MIS, and other decision support systems, like Management Reporting System, MRS, with data analytics. Next, we will examine the three major stages of AIS, and lastly, the objectives of AIS. The third topic will be a discussion of the key skills needed to be able to design and create an Excel-based AIS, or any kind of information system for that matter. After this, a video presentation of how Excel-based AIS works will be presented. And so we're off to our first topic.
Accounting as an information system. As was discussed in your basic accounting subject, one characteristic of accounting is that it is an information system. By system, we mean that there are several components working interdependently, following a predefined process that includes specific tasks progressing toward the common goal of the components. None other than to provide the financial information needed by management to make important economic decisions. Accounting is described as an information system because it is much more than just recording numbers. It is a structured process for collecting, processing, storing, and communicating financial information to help people make decisions. Just like any other information system, accounting has inputs, processes, and outputs. Inputs are primarily the source documents, such as invoices, receipts, payroll records, and purchase orders. Processes include recording, classifying, and summarizing these inputs using accounting rules and tools. Outputs are the financial statements, management reports, budgets, and dashboards that provide useful insights. Just as a computer information system gathers raw data and converts it into meaningful reports, accounting transforms raw transaction data into useful information for decision makers such as managers, investors, creditors, and regulators. The term is important because it highlights that accounting is not just bookkeeping. It is a system designed to provide reliable, timely, and relevant information. It also shows the connection between data, the individual transactions, and information, the insightful reports. And finally, it emphasizes the role of controls and accuracy. Since the quality of decisions depends on the quality of the information system, an AIS is usually surrounded by subsystems or small segments of it that process financial and non-financial transactions that directly affect the processing of financial transactions. An example of such non-financial transactions is the infrequent updates made to the chart of accounts, a common master file found in AIS system parameters. These updates are made to keep the list current and allow processing of financial transactions that affect the accounts. Otherwise, the transactions will be rejected by the system due to missing system parameters. Although not technically a financial transaction, these changes provide vital information for processing subsequent financial transactions. Accounting information system concepts. The AIS is composed of three major subsystems, namely, 1. The Transaction Processing Systems, or TPS, which supports daily business operations with numerous reports, documents, and messages for users throughout the organization. 2. The General Ledger Financial Reporting System, or GLFRS, which produces the traditional financial statements, such as the income statement, balance sheet, statement of cash flows, tax returns, and other reports required by law. And 3. The Management Reporting System, or MRS, which provides internal management with structured special-purpose financial reports and information needed for decision-making such as budgets, variance reports, and responsibility reports. Today, businesses are getting involved deeper into data analytics. Will data analytics eventually replace MRS? The short answer is, the data analytics will not replace MRS in the future, but enhance it. Data analytics and MRS serve different purposes. While MRS is about delivering structured, routine reports such as sales reports, expense summaries, budget versus actual. Data analytics is about deeper exploration and prediction, answering questions like why sales fell, what customers will buy next. Managers will always need standardized reports for compliance, monitoring, and decision-making. Even the most advanced analytics models need a reporting layer to present results in an understandable format. Simple MRS outputs are often high-level summaries that executives can interpret quickly, while analytics can be more technical and detailed. Data analytics will enhance MRS in terms of integration, automation, and decision intelligence. They will eventually merge as future MRS will likely integrate analytics capabilities. Instead of just showing, sales dropped 10%, reports will also highlight. The drop was driven by reduced demand in Region 1. Diagnostic analytics, and sales are forecasted to rebound next quarter. Predictive analytics. In terms of automation with AI and analytics tools, MRS will become more real-time interactive and self-updating, reducing the need for manual reporting. Managers will increasingly expect reports to come with insights and recommendations, not just numbers, driving intelligent, data-driven decision-making. Accounting Information System and Other Decision Support Systems. In your other subjects, you must have heard of the Management Information System, or MIS. Management often requires information that goes beyond the capability of AIS. As organizations grow in size and complexity, specialized financial areas emerge, requiring additional information for production planning and control, sales forecasting, inventory, warehouse planning, market research, and so on. The MIS processes non-financial transactions that are not normally processed by traditional AIs. These transactions include, but are not limited to, capital budgeting systems, market analysis, delivery scheduling, job skill tracking, etc. Why is it important to distinguish between AIS and MIS? Because of the highly integrative nature of modern information systems, management and auditors need a conceptual view of the information system that distinguishes key processes and areas of risk and legal responsibility from the other non-legally binding aspects of the system. For example, AIs must be distinguished from MIS to identify a boundary of the PFRS, Sarbanes-Oxley or SEC and BIR scope of responsibilities of the management. The future of MIS and data analytics is convergent. Already, modern MIS are being designed with built-in analytics such as dashboards with drill downs, predictive and prescriptive modeling, AI insights. MIS without analytics risks being descriptive only. Data analytics without MIS risks being fragmented and unstructured. Together, they create a complete decision support ecosystem. MIS will act as the delivery system, while data analytics will be the engine of insights inside it. Together, they evolve into decision support systems, or DSS, and eventually business intelligence, or BI platforms. Basic model of information systems. The basic model of any information system, including AIS, is comprised of three major stages, namely, 1. Data collection, which task is to collect data from various sources, primarily the transaction processing systems or TPS. This type of system is the most widely used in an organization because it is designed to accommodate the day-to-day transactions of the business. It is built to be robust, highly reliable, highly available, and user-friendly. The main purpose of the data collection stage is to ensure that event data entering the system are valid and free from material errors. In many respects, this is the most important stage in the system. Should transaction errors pass through data collection undetected, the system may process the errors and generate erroneous and unreliable output. This, in turn, could lead to incorrect actions and poor decisions by the users. As IT people always say, garbage in, garbage out. Two rules govern the design of data collection procedures: relevance and efficiency. The information system should capture only relevant data. A fundamental task of the system designer is to determine what is and what is not relevant. He or she does this by analyzing the user's needs. Only data that ultimately contribute to information are relevant. The data collection stages should be designed to filter irrelevant facts from the system. Efficient data collection procedures are designed to collect data only once. These data can then be made available to multiple users. Capturing the same data more than once leads to data redundancy and inconsistency. Information systems have limited collection, processing, and data storage capacity. Data redundancy overloads facilities and reduces the overall efficiency of the system. Inconsistency among redundant data elements can result in inappropriate actions and bad decisions. Data versus information. At this point, it is appropriate to distinguish data from information. Data are facts, which may or may not be processed, edited, summarized, or refined and have no direct effect on the user. By contrast, information causes the user to take an action that he or she otherwise could not, or would not, have taken. Information is often defined simply as processed data. This is an inadequate definition. Information is determined by the effect it has on the user, not by its physical form. For example, a purchasing agent receives a daily report listing raw material inventory items that are at low levels. This report causes the agent to place orders for more inventory. The facts in this report have information content for the purchasing agent. However, this same report in the hands of the personnel manager is a mere collection of facts, or data, causing no action and having no information content. We can see from this example that one person's information is another person's data. This information is not just a set of processed facts arranged in formal report. Information allows users to take action, to resolve conflicts, reduce uncertainty, and make decisions. We should note that action does not necessarily mean a physical act. For instance, a purchasing agent who receives a report showing that inventory levels are adequate will respond by ordering nothing. The agent's action to do nothing is a conscious decision, triggered by information and different from doing nothing because of being misinformed. The distinction between data and information has pervasive implications for the study of information systems. If output from the information system fails to cause users to act, the system serves no purpose and has failed in its primary objective. Let's go back to our discussion of the 3 stages of information systems. The second operational stage of the information system is data processing. Once collected, data is processed, that is, edited, summarized, or refined, to produce information. Tasks in the data processing stage range from simple to complex, depending on how the system was designed. Examples include mathematical algorithms such as linear programming models used for production, scheduling applications, statistical techniques for sales forecasting, and posting and summarizing procedures for accounting applications. An important task related to data processing is database management, performed by the database administrator, or DBA, using a database management system, or DBMS. The organization's database is its physical repository for financial and non-financial data. In this course, we use the terms data, database and database management almost exclusively in digital terms. But in a general sense, data can be in analog or digital form. It can be a filing cabinet or a computer disk. Regardless of the database's physical form, we can represent its content in a logical hierarchy. On the next slide, you can see the levels in the data hierarchy: attribute, record, and file in both physical and electronic format. Data attribute. The data attribute is the most elemental piece of potentially useful data in the database. An attribute is a logical and relevant characteristic of an entity about which the firm captures data. The attributes shown on the slide are logical because they all relate sensibly to a common entity: customer information. The attributes in both physical and electronic data are customer number, name, address, and credit limit. Each attribute is also relevant because it contributes to the information content of the entire set. As proof of this, the absence of any single relevant attribute diminishes or destroys the information content of the set. The addition of irrelevant or illogical data would not enhance the information content of the set. Record. A record is a complete set of attributes for a single occurrence within an entity class. For example, a particular customer in the sample on the slide has customer number, name, address, and credit limit. This complete set is one occurrence or record within the class. To find a particular record within the database, we must be able to identify it uniquely. Therefore, every record in the database must be unique in at least one attribute. This unique identifier attribute is the primary key. Because no natural attributes such as a customer name can guarantee uniqueness, we typically assign artificial keys to records. In our example, the key for the customer info is the customer number. File. A file is a complete set of records of an identical class, in our example, a complete set of customer records. Similarly, files are constructed for other classes of records such as accounts receivable, inventory, accounts payable, and payroll. The organization's database is the entire collection of such files. Database management. Database management involves 3 fundamental tasks: 1 storage, 2 retrieval, and 3 deletion. The storage task assigns keys to new records and stores them in their proper location in the database. Retrieval is the task of locating and extracting an existing record from the database for processing. After processing is complete, the storage task restores the updated record to its place in the database. Deletion is the task of permanently removing obsolete or redundant records from the database. The third stage in the basic information system model is information generation. This is the process of compiling, arranging, formatting, and presenting information to users. Information can be an operational document such as a sales order, a structured report, or a message on a computer screen. Regardless of physical form, useful information has the following 5 characteristics: relevance, timeliness, accuracy, completeness, and summarization. Relevance requires that the contents of a report or document must serve a purpose. This could be to support a manager's decision or a clerk's task. We have established that only data relevant to a user's action have information content. Therefore, the information system should present only relevant data in its reports. Reports containing irrelevancies waste resources and may be counterproductive to the user. Irrelevancies detract attention from the true message of the report and may result in incorrect decisions or actions. Timeliness dictates that the age of information is a critical factor in determining its usefulness. Information must be no older than the time of the action it supports. For example, if a manager makes decisions daily to purchase inventory from a supplier based on an inventory status report, then the information in the report should be no more than a day old. Accuracy requires that information must be free from material errors. However, materiality is a difficult concept to quantify. It has no absolute value. It is a problem-specific concept. This means that, in some cases, information must be perfectly accurate. In other instances, the level of accuracy may be lower. Material error exists when the amount of inaccuracy in information causes the user to make poor decisions or to fail to make necessary decisions. We sometimes must sacrifice absolute accuracy to obtain timely information. Often, perfect information is not available within the user's decision time frame. Therefore, in providing information, system designers seek a balance between information that is as accurate as possible, yet timely enough to be useful. Completeness means that no piece of information essential to a decision or task should be missing. For example, a report should provide all necessary calculations and present its message clearly and unambiguously. Summarization is aggregation in accordance with the user's needs. Lower-level managers tend to need information that is highly detailed. As information flows upward through the organization to top management, it becomes more summarized. Feedback and information systems. Feedback is a form of output that is sent back to the system as a source of data. Feedback may be internal or external and is used to initiate or alter a process. For example, an inventory status report signals the inventory control clerk that items of inventory have fallen to or below their minimum allowable levels. Internal feedback from the information will initiate the inventory ordering process to replenish the inventories. Similarly, external feedback about the level of uncollected customer accounts can be used to adjust the system parameters related to the organization's credit policies. Information system objectives. Each organization must tailor its information system to the needs of its users. Therefore, specific information system objectives may differ from firm to firm. 3 fundamental objectives are, however, common to all systems. 1. To support the stewardship function of management. Stewardship refers to management's responsibility to properly manage the resources of the firm. The information system provides information about resource utilization to external users via traditional financial statements and other mandated reports. Internally, management receives stewardship information from various responsibility reports. 2. To support management decision-making. The information system supplies managers with the information they need to carry out their decision-making responsibilities. 3. To support the firm's day-to-day operations. The information system provides information to operations personnel to assist them in the efficient and effective discharge of their daily tasks.
Skills needed to build an Excel-based AIS. When one is called upon to participate in the design of an AIS, he needs to possess certain traits and skills to ensure that the physical system is not only technically functional, but also aligned with accounting standards, capable of integrating different business processes, and responsive to the real decision-making needs of management. Without the following skills and knowledge, an AIS risks becoming just a collection of spreadsheets or software features. With them, it becomes a reliable, efficient, and value-adding system that supports accuracy, compliance, and strategic insight. For one to be qualified to design and create an information system, what are the necessary skills and characteristics he needs to possess? 1. Technical Excel proficiency. If one wants to use Excel as an AIS, he has to be proficient at using its advanced functions, especially those that enable one to manipulate and summarize dynamic data, or data that changes due to new incoming data, new type of transactions, or updates to reference files that changes the values of data. Excel must go beyond simple data entry to serve as a reliable system for recording, processing, analyzing, and reporting financial information. Advanced functions such as lookup formulas, pivot tables, logical and conditional functions, and data validation tools allow users to automate calculations, minimize errors, enforce accuracy, and create dynamic financial reports. They also enable the integration of internal controls such as restricting input errors or tracing transaction histories, which are critical in an AIS. Without mastery of these tools, Excel would function merely as a digital ledger, but with advanced skills, it can be transformed into a powerful, flexible, and cost-effective accounting information system that supports both compliance and decision-making. 2. Accounting knowledge. Knowledge in accounting is essential in designing and creating an AIS because the system must reflect and support the logic, rules, and processes of accounting itself. Without understanding accounting, the system would not be able to provide accurate, reliable, and useful financial information. Accounting provides the rules for identifying, measuring, recording, and reporting financial transactions. An AIS must be built on these rules to ensure data integrity. The chart of accounts, double entry system, and concepts like accruals, matching, and materiality guide the system design logic, especially how the system classifies and processes transactions. Knowledge of accounting ensures the system aligns with standards such as IFRS, GAAP, or tax regulations, so reports generated are valid and legally compliant. Such knowledge also helps in embedding controls within the AIS, for example, segregation of duties, audit trails, reconciliations, to prevent errors and fraud. The AIS must also provide management with timely and accurate financial insights as a decision support system, or as a source of data for data-driven decision-making. An understanding of accounting ensures the reports, dashboards, and analytics meet the real needs of decision-makers. And as businesses face changes in regulations, reporting requirements, and management needs, an accounting-informed system can be designed to adapt to these changes without losing accuracy. In short, an AIS is only as good as the accounting logic behind it. Without accounting knowledge, the system may automate processes, but it won't ensure that the information produced is meaningful, reliable, or compliant. 3. Systems thinking. Systems thinking is an approach to understanding and solving problems by looking at the whole system rather than just its individual parts. It recognizes that elements within any system, whether an organization, a business process, or even society, are interconnected and interdependent, meaning a change in one part can create ripple effects throughout the system. Instead of focusing only on isolated symptoms, systems thinking examines relationships, feedback loops, structures, and patterns to identify the root causes of issues and the long-term consequences of decisions. It is an important skill in integrating parts of an AIS. An accounting information system connects different business areas, sales, purchases, payroll, inventory, etc. Systems thinking ensures these modules are designed to work together smoothly, so data flows consistently and reports remain accurate. And when there are changes to any part of the system, systems thinking will allow the designer to anticipate ripple effects. For example, automating payroll or changing tax settings can impact reporting, compliance, and even cash flow projections. Systems thinking ensures that such changes are evaluated in terms of their wider consequences, not just their immediate effect. In short, systems thinking is about seeing the big picture and understanding how parts work together within the whole. As mentioned at the outset, systems thinking helps professionals see beyond individual tasks, anticipate consequences, and design processes that are efficient, reliable, and adaptable. 4. Business process mindset. As mentioned earlier, business process management, BPM, is a structured approach that organizations use to analyze, design, execute, monitor, and continuously improve their business processes. It is a crucial skill in designing an AIS because an information system must support, streamline, and often automate the organization's core business processes. BPM provides a clear understanding of how tasks, data, and decisions flow across departments, which ensures that the system is designed to reflect real operational needs rather than just technical features. By mapping and analyzing processes, BPM helps identify inefficiencies, redundancies, and bottlenecks that the system should address. It also ensures proper integration between functions, for example, sales, accounting, inventory, so that information flows consistently and accurately across the organization. Without BPM, an information system risks being misaligned with business goals, resulting in wasted resources, poor user adoption, and unreliable outputs. In short, BPM ensures that an information system is built around the actual business processes it is meant to serve, making it efficient, relevant, and value-adding.
Presentation of an Excel-based AIS. Now we switch to the video presentation of an actual Excel-based AIS, using a design we have used in previous academic years. It is closely patterned with the traditional manual financial accounting system that BS accountancy students have been accustomed to with their practice sets in the first year level, which uses manual forms and accounting books which are updated and maintained manually. In this simulation presentation, though, we will use transaction files which contain transaction data from various subsystems, like the point of sale system, or POS, online selling platform, check writing, purchasing, and sales. The process simulated here is the batch file method, which collects and processes data in batch files that are created based on a required number of transactions, time interval, or other triggers that may be decided upon by management. The Excel-based AIS in this simulation uses only one workbook with multiple spreadsheets, 8 worksheets to be precise. The first worksheet is COA, which stands for Chart of Accounts. Here, we find the list of accounts that our fictitious company, which we will call by the sophisticated name Regala's Buy and Sell, maintains. The COA is one of the master files that is maintained. It also acts as a reference file, used by other processes to ensure that encoded account numbers are accurate, and that accounts that are presented in financial reports are properly classified. The COA is part of the system parameters, that is, the rules built into the system which makes the AIS process the transactions accurately. When new accounts have to be used, the COA needs to be updated through a system parameter update business process. The attributes of the COA parameter file worthy of note are ACCT offset. This is the default offset account used when no other account is specified by the source systems. However, in our presentation we assume that all the source systems used a specific offset account. ACCT BAL. This is the account's normal balance. If 1, it means the normal balance is debit. If -1, it means that the normal account balance is credit. We will use this parameter when we will be summarizing the current transactions from the source files. The second worksheet is BSBEG, which is short for Balance Sheet Beginning. It contains amounts from the previous month's balance sheet, as of the end of that month. Beginning balances of the accounts are used as one of the data needed to compute for the account's ending balances, once the current transactions are processed. The third worksheet is Current. You will notice that this worksheet does not contain any records at all. Not yet. This worksheet will contain simulation of the data from transaction files of the transaction processing systems. In our case, data will come from the various transactions files from various transaction processing systems, which are imported into this worksheet, as you will see in a while. Notice also some text to the right of the data range alerting you to an important system parameter, which is the maximum number of records allowed to be processed. Currently, it is set at 1000 records. If you will check cell A1002, you will notice that it indicates the end of the file. If more than 1000 records are imported, the content of this cell will be overridden, and the user will be alerted that the maximum number of records have been breached with the words, "Warning. End of file reached." The conditional message is defined using the if function, and the formatting changes to red, using the conditional formatting feature. The only attribute that contains data in the current transactions file is the CRSEQ, which is the assigned sequence number to the data that we will be importing. All other attributes will be populated from the CSV files. CRSRC represents the code, assigned by the TPS, where the data originates. CRKey is the unique identification number of the transactions generated by the TPS when the transaction is committed into the system. CRSDoc and CRRDoc are the source and reference, or turnaround documents that supports the transactions. CRDESC is a short description of the transaction, also supplied by the source TPS. CRAMT is the amount of the transaction. CRDR is the account code for the debit entry, and CRCR is the account code for the credit entry. It is assumed by the system design that all transactions will come from the source TPSs, along with the correct debit and credit account codes. The fourth worksheet is Summary. This worksheet is a simulation of the manual ledger, without the detailed entries. It contains the following. 1. Account ID. This is the account code copied from the COA worksheet. 2. Account NB. This is the normal balance indicator. Again, if 1 it is debit, and if -1 it is credit. The VLOOKUP function is used to get the value from the COA file, using the ACCTID as the lookup value. 3. ACCTBEG. This is the beginning balance from the prior period. For balance sheet accounts, this will be the balances as of the last date of the prior period. For income statement accounts, the balances will all be zero, as all transactions of income statement accounts are closed to the income summary account and to the appropriate equity account at the end of a period. 4. ACCTT DR and ACCT_TCR stands for total debits and total credits. Using the SUMIFS function, the total debit and credit amounts from the current worksheet are calculated under these fields or columns. Notice that the sum range and criteria range arguments are set to include all records up to the end of file. If the current transaction has less than 1,000 records, the total debits and credits will still be accurate. 5. ACCT&D is the ending balance of each account calculated using the beginning balances of the accounts from the BS-BAG worksheet and the total debits and credits from the current worksheet. It uses the if function to calculate the right balances, evaluating conditions such as whether the normal balance of the account is debit or credit, as indicated by the ACCT_NB field. At the bottom of the worksheet, you will find what we call control hash totals of debits and credits for the beginning balance, total debits, total credits, and ending balance fields. These are calculated using the SUMIFS functions for the beginning and ending balances, and the simple sum function for the total debits and credits. The purpose of these calculations is to ascertain the accuracy of the debit and credit amounts. If the debits and credits balance, it indicates that the current transactions, as well as the beginning and ending balances, are accurate. On the other hand, if these control hash totals do not balance, there is problem either with the formula or the data imported into the current worksheet. The fifth worksheet is the WS worksheet. WS simply means worksheet, representing the counterpart of a paper columnar worksheet used in your basic accounting subject when performing the end-of-period tasks of 1. Preparing the trial balance, 2. Including adjustments of prepaid accounts to bring them from their book balances to their actual balances, 3. Computing for the adjusted balances in the adjusted trial balance, and from the adjusted trial balance, 4. Extending the amounts to the income statement and balance sheet's debit and credit columns. Under the adjustments columns, amounts and letters A through I for some balance sheet accounts are seen. These indicate that the accounts need to be adjusted for the amount of expenses for the current period. The amounts will be automatically updated into the cells of the expense counterparts, since the cells of the balance sheet accounts that need to be adjusted are referenced by the cells in the income and statement accounts. These are the cells with the green background. In the income statement columns, notice that the balance of account 140, inventory, had been extended under the debit column. This is because the beginning inventory balance will be used to compute for the cost of sales amount in the income statement. The inventory balance is the first amount extended. Further down the rows, a cell in orange background stands out. This cell will hold the amount for the account ID 819. Inventory end. Note that this account code does not appear in the beginning balance sheet, the BS bag. That is because the amount of ending inventory balance will be transferred as the ending balance or the end of period balance of account 140 inventory. And that is why this account is extended under the debit column of the balance sheet section and highlighted to indicate that this account needs to be treated differently. In actual situations, the amount of the ending inventory may be determined by taking a physical count of the inventory, or computing its book value by using the inventory beginning, purchases, and sales data. In our example, a hypothetical ending inventory amount based on a similarly hypothetical physical count was used. Right at the bottom of the worksheet, the account ID 600 or the income summary account is found. The difference between the debit and credit columns of the income statement will determine its value. The amount is transferred to the balance sheet column to form part of the ending balance of account 510, Capital Regala account. Note also that, as the current transactions haven't been imported yet, all the debit and credit columns are in balance. The AIS, the SCE, and the BSN worksheets are the formal financial statements whose values are derived from the WS worksheet. The sum ifs and VLOOKUP functions are largely used to locate for or aggregate the values from the appropriate columns of the WS worksheet. However, the simple straightforward cell referencing formula was used in this case to show how simple Excel formulas can replace a tedious manual work. Preparing the month-end financial statements. Assuming that management requires monthly financial reports for internal use, the monthly financial statements need to be produced. Before that can be done though, the current transactions need to be imported from the batch files to the Excel current worksheet. A. Importing the current transactions. 1. Go to the current worksheet. 2. Position the cursor at cell B2. 3. Click on Data, get external data, and from Text. In the Import Text File dialog, find the folder where the CSV files are located. Choose one file. It doesn't matter which one to import first. And click Import. The text import wizard will appear. Notice that first row of data of the transaction file being imported is different. That is so because the first record in row 1 is the header information. Headers and batch control data that are read by systems to prevent duplication of file processing and assure completeness by accounting for the sequence of the files and the number of transactions contained in the file. In large business entities that process huge volumes of transactions, transactions are usually grouped in batches, depending on the number of accumulated transactions, or the length of time passed, or other triggers. This is known as batch processing. The transactions are divided into chunks and each chunk is saved as a batch file. Sometimes batch files also contain footer information to include other processing controls. The transaction files in our simulation do not have footers. After comparing the headers and footers with the content of the file and the memory of the batch processing module, which is not simulated here, the headers and footers would have served their purpose. In this simulation, the system doesn't need to process the headers of each file because they are not real transactions. So, it will just ignore them. On the Set Import at Row options, 2 is Input, telling the import wizard to start importing at this point, excluding the header. Then click Next for Step 2 of the Text Import Wizard. The delimiter is set to Tab. However, our transaction files are delimited with commas, so Tab is unchecked and comma is selected instead. Note how changing the type affects the data presentation. Note also that the header is handled differently by the import wizard, treating it as just one long string of text on a single field. Click Next again for Step 3 of the Text Import Wizard. Nothing needs to be changed here. Excel will just import all data, assigning them with a general type, which converts numeric values to numbers, date values to dates, and all remaining values to text. So, we just click on Finish. The next dialog box asks to import the data starting at the cell where the cursor is currently in position, at cell B2. Note how Excel has ignored the header information and starting the import from the first record of the transaction file. The same steps are performed for each import process for the rest of the current transaction files. There are all 9 CSV transaction files and their data imported, excluding the headers. One needs to remember to always start the import from record number 2. After all transaction files are imported, there should be 876 records or entries in the current worksheet, representing the debit or credit pairs of each transaction. Data normalization or cleaning should be done if there are details that appears to be out of place or erroneous, like unrecognizable characters or garbled symbols. Whenever something went wrong during the import process, close the Excel file, open the original file and start again. After the current transactions have been correctly imported, the payroll file is last processed. This file is a simulation of a journal voucher coming from whichever department checks the payroll register against the cash disbursement, which usually is the accounts payable department. The entries have to be encoded into the current worksheet by manually encoding the entries, which mimics the usual update of the general ledger in a real case scenario. The next step is to check the summary worksheet. The total debits and credits at the bottom show that all transactions are recorded. However, as in the manual process, this does not tell us that the correct account codes have been used. The source TPSs have to be correctly configured to use the correct account codes for all types of transactions. Now ending balances needed for the trial balance and other columns in the WS worksheet is available. Note how the values in the cells, previously blank, are updated. Note also that the financial statements are now almost complete, but not yet. We still have the adjustments and the ending inventory to deal with. B. Computing and inputting the end of period adjustments. Next to check is the WS worksheet. End of period adjustments made here are as follows. 1. Go to cell H11. Prepaid rent, credit column. Assuming that the prepaid rent is good for 1 year, and the rent for January needs to be recognized as expense, we input the formula to compute for the expired portion, which is the amount divided by 12. The same process is done for the other prepaid accounts, assuming that they are all good for 12 months. 2. For the depreciation expense related to non-current assets, it was assumed that the net book value as of the end of the period is still good for 5 years. Formula for these accounts were written just so. 3. As for the customer deposits, it was assumed that out of the total balance of the number of reserved items from the online store, a portion of that have already been shipped to the customers. So, the balance needs to be reduced by the same amount. C. Inputting the ending inventory balance. As for the ending inventory, it was assumed that a physical inventory was taken, and the actual balance determined at a certain amount. This amount is input on the credit side of the account 819 ending inventory in the income statement section. Once encoded, the same amount is updated as the balance of account 140 inventory in the balance sheet section, since the formula in this cell is a reference to the amount in the income statement area. After all necessary adjustments have been input in the appropriate cells in the WS worksheet, the net income for the month is automatically computed by a formula. Notice too that the income statement is already updated with the values from the WS worksheet and calculates the same net income. That income is updated into the statement of changes in equity as an addition to the beginning capital balance. The capital balance is reduced by a drawing transaction coming from the check disbursement system, and this is also recorded to arrive at the ending capital balance. This amount is carried over to the end of period balance sheet. The simple Excel-based AIS in our simulation is now up to date as of the end of the current period. For the next month, The balances of the BSN sheet needs to be moved to the BS bake sheet, restarting the cycle. You may then use the skills you will acquire in the next chapter about MS Word to write a narrative report of this month's results of operations and financial position. And, assuming way in advance that you are an accounting professional employed in a business entity and called for a boardroom meeting to discuss the financial report, you will need the skills you will acquire in the subsequent chapter about MIMIS PowerPoint, enabling you to design and create professional-looking multimedia presentations fit for boardroom use.
There it is. Our simple Excel-based AIS using the Excel formulas and functions we have learned in chapters 1 and 2. In summary, you discovered how accounting functions as an information system, transforming raw data into meaningful insights through collection, processing, and information generation, and how Excel can be harnessed to design a practical AIS that mirrors real-world financial processes. From mastering essential functions like VLOOKUP, SUMIFs, and IF, to understanding data accuracy, adjustments, and reporting, the lessons highlight that Excel is more than just a spreadsheet tool. It is a powerful platform for building systems that support stewardship, decision-making, and daily operations. As you move forward, take this as an inspiring invitation to develop and refine your technical Excel, systems thinking, and business process management skills, because the ability to design and create an Excel-based AIS is not just an academic exercise. It is an early career advantage that will empower you to turn data into decisions, add value to any organization, and set yourself apart as a forward-thinking accounting professional. In our classroom activities, we will have a similar simulation so you can appreciate the power of the MS Excel skills that you have mastered to date. Once you get the hang of it, you can use the principles applied here to create your own, and maybe even a better, Excel-based AIS. On the slide are the references and tools I have used to produce this lecture video. Thank you for your time and stay safe always.